All right, good morning, everyone. Good morning, everyone. Welcome to the 2014 Multifamily panel. This year, we basically, we've got 5 amazing panelists here. I'll go through introducing them in a second, but first, I always like to start this, the multifamily panel with a quick exercise. I want anyone in the room who's a real estate broker to just close your eyes for a second. Close your eyes. All right, good. If you own multifamily property, I want you to put your hand up. Go ahead, Sam, give them our cards. Go ahead quickly. All right, brokers, you can open your eyes again. You're good. Just want to make sure. Sam, seriously, give them the cards. All right. Basically, this year, we decided to focus on specific deals. It worked very well. It's the 3rd year in a row that we're doing it. I've done it 3 years in a row. My name's Adam Hess. I'm a partner and senior vice president at Terra CRG. I handle the multifamily division for the company. I've done a lot of deals with these guys, and we decided this year to focus on specific deals. So we'll have each panelist talk about those deals, and for those of you who aren't readers and like the pretty pictures, we will keep pretty pictures up on the screen behind you, beautiful renderings. You'll have something to look at if you tune out if the panel gets too boring, which I hope it won't. Going with the multifamily, the specific deals, we wanted to mix it up a little bit. So we have panelists that are doing different type of multifamily. We have people who are building new multifamily. We have guys that are doing conversions that are going to be multifamily. And we have guys who own big multifamily. So I'll go down the line and I'll give my little introduction of each guy. It will be with lots of hyperbole and riddled with factual inaccuracies, but it'll be a little bit fun. So Martin Nussbaum in the middle there, that's Martin, Slate Property Group. Martin owns most of 4th Avenue. He's bringing about 10 to 20,000 units to 4th Avenue. He's decided to make all of it affordable housing. Affordable if you make $500,000 to $1 million a year. So we can thank Martin for that. Let's go down the line. Jamie Wiseman, he's amazing. Cayuga Capital. I think everyone knows Cayuga Capital. I can barely get their name out of my head. Matt Cosentino handles Bushwick and Bed-Stuy for my company. He must say Cayuga Capital behind me 10 times a day. So these guys basically own Bushwick, and they have an amazing project to talk about. Eddie Seton, or as he's known to his friends, he's on the end here, Big Ed. Big Ed is Big Ed owns most of Central Brooklyn. He'll tell you how many units he owns, but he's basically mine and every other broker's first call, and we're trying to flip something that's overpriced, and his answer is invariably no. David Shorenstein on the end. David really has nothing to do with this panel, but his holiday party, he let me play basketball on the floor of the Madison Square Garden, so I just decided to put him up here. No, David's principal at Silver Shore Properties. They are, without question, the most active buyer right now in Brooklyn. When I first met them, they had bought maybe one burnt-out shell in Harlem, and now the last properties we're working on them for them. It's Silver Shore LLC 63, and they're closing 4 more deals this week. So if you want to sell slightly below market value, please come up and talk to David after. Sam Sidhu, he's Megalith Capital. I hope I'm saying that right. Megalith Capital. They're huge right now, buying all over Brooklyn. They own multifamily, and I think he's talking about one of the more amazing projects on this, and also a project on Front Street in Dumbo. So why don't we go down the line, let you guys give your serious introductions. Let's start with Eddie. Why don't you go ahead, since you're right next to me.
Sure, why not? Hi, my name is Eddie Seton from Shamco Management and Shamma Properties. We are in the, obviously, multifamily business. We buy existing multifamily buildings in the boroughs. We have about 1,500 units now. We like to go in as operators and manage the property ourselves, bring up the buy something that needs that has below market rents, and bring up the value by getting those rents up every year. And that's basically it.
How many units do you guys own in Central Brooklyn?
About 1,000.
Okay, great. James?
I'm one of the two principals of Cayuga Capital Management. We're developers of multifamily and actually some commercial in Williamsburg, Bushwick, and Greenpoint. We have about 400 million in projects. About 80% of that is residential, and I'd say 2/3 of it is in Bushwick, and then the rest is in Williamsburg and Greenpoint. We're supposed to talk about our project specifically, or are we going to do that?
Yeah,
after?
you know what, let's let everyone introduce themselves, and then we'll come back and we'll
Great.
go into your specific projects.
Martin Nussbaum, Slate Property Group. We are what we like to call a fully integrated real estate company. We focus on value add and development deals in New York City and Brooklyn, albeit we won't discuss New York City today. Manhattan. Yes,
Manhattan,
yes.
sorry.
Correct. We're focusing heavily in Brooklyn on ground-up development or big conversion-type transactions. I've been asked to speak specifically about Fourth Avenue because clearly we're doing a little bit over there, and we'll get back to that later.
Sam Sidhu with Megalith Capital. Despite Adam's introduction, we own small multifamily. We have a couple hundred units. We have a portfolio that spans between Los Angeles, Texas, and Brooklyn. We have been focused over the last 18 to 24 months in Manhattan and Brooklyn on development opportunities, but we have been and are aggressively looking to add to our value-add multifamily portfolio.
David Shorenstein, Principal of Silver Shore Properties. I'm really excited to be here, and thank you for having me. We started Silver Shore Properties in 2010, virtually with nothing. We bought our first building, which was a $290,000 building in Clinton Hill, and we worked really hard and continue to work really hard, and since then we've bought over 65 buildings, with 70% of them in Brooklyn, so we're very Brooklyn-focused. We consider ourselves the most active buyer in Brooklyn, as Adam said, and we buy everything from 3-unit townhouses to 100-unit buildings, and we're in all areas of Brooklyn: Sunset Park, Crown Heights, Brooklyn Heights, Prospect Heights, Greenpoint, Williamsburg, and many others.
So I said Silver Shore LLC 63. You just said 65. Did you guys
couple
close on
didn't
2
have,
deals yesterday? My gosh.
A couple are not under the Silver Shore name.
Oh, okay. All right. Fine. All right. So thanks, guys. So we'll go in a little bit about specific projects that you guys have done, specific properties, deals, and the goal is to kind of, in an open forum, have these guys talk a little bit about the deals they've done, the challenges they've encountered. So why don't we start with Sam? Why don't you go ahead and talk about 177 Front Street?
Sure. So, through a partnership with Urban Realty Partners, we acquired some vacant lots from the Watchtower Society early last year. On the site, we are building a 105-unit rental building, 80/20, 8-story bulk with a 12-story tower. It's going to have parking, great views of the water and the city, and we expect to start construction this quarter.
And how many units is the project going to have? I'm not
105.
Sure. 105 units. And are you doing affordable housing as sort of a big theme? Not specifically affordable housing. I don't know if you're doing any affordable housing down there, but what type of unit mix are you guys doing in the project?
So we are doing on-site affordable,
Okay.
and we're going to have mostly 1s and 2s and a sprinkling of 3s.
Okay. Now, I mean, I've heard in different neighborhoods, different people say, different unit mixes were better, and I think it's something interesting. I mean, when you guys are you're not doing any 3s, right?
A few 3s.
A few 3s.
Yeah.
So you're doing a minority of 3s. So, I guess the question is, what's the thinking that goes into that when you guys are trying to decide what unit mix to use for a project?
So, the view that we had on Dumbo when we first started looking at the market about a year and a half ago was that it is the Soho Tribeca of Brooklyn. It has that sort of industrial feel. It has the cobblestone streets. It has the families that want to sort of have access to the park and the water and the amenities that is pricing them out of New York, of Manhattan, but also has the great access. So, the trade-off that we were thinking about when on the rental building, we're also doing a condo project there, was as opposed to having a bunch of studios in ones, trying to cater to that similar future condo buyer who's looking for the larger units, family-style building.
Just out of curiosity, in your condo building, are you doing larger units then?
Yes, yeah.
All right, let's go to anything else. I mean, Sam, anything interesting or any challenges? I kind of like to hear the background. Any challenges in getting that deal done that you can openly share?
The one thing that's interesting to think about sitting today and thinking about Dumbo as a prime Brooklyn market, and you may have had a similar experience 6 months before us when you were working on your site, is that a lot of people looked at the site, both projects, and Brooklyn was not as much on people's radar screen 12 months ago. It was an uphill battle convincing some of our partners that rents could be north of $60 a square foot. It was challenging to say that condos could be sold north of $900 to $1,000 a square foot. And now you think about that, and people are thinking that you'd be crazy to think it's only going to be 60 or 900.
That's a good point.
You ever feel like that's because Brooklyn is sitting next to Manhattan, right? Like I always feel like you're trying to, let's say you're pitching somebody in Texas or California, right? Brooklyn is a good-looking gal, right? She just happens to be right next to a really good-looking gal, right? So that sometimes raising capital is the problem. Yeah.
I don't know. It depends on what type of girl you like. I mean, we're a little bigger, so I mean, I don't know.
Brooklyn is
Might not be appropriate, but
not in Williamsburg.
not in Williamsburg.
Not in Williamsburg.
Good point. Speaking of 60 and 900, Martin, you want to talk a little bit about your project on 4th Avenue?
Sure. So we purchased a property on First Street and 4th Avenue. It's about an 80,000 square foot development site. We're turning it into what we consider to be probably the highest end rental building on 4th Avenue, and we're shooting for that becoming something similar in Park Slope in general. It currently is and was when we purchased it at McDonald's. So in terms of difficulties, one of the biggest difficulties I had was convincing my father, who's a religious Jewish guy, that it's okay for me to own a McDonald's.
That's a good point.
Once,
That's a good point.
Once we got past that, that was the biggest obstacle I had in purchasing the location. But in all seriousness, we brought in what we view as a pretty well-known New York architect to design something that we think is pretty unique for the location. And our unit mix is also going to be spread between sort of studios 1s and 2s and a sprinkling of 3s. We've spent a lot of time sort of thinking about the proper layouts and efficiencies of the units, which I think is very important when you're thinking about a rental in particular. We'll have about 4,000 square feet of retail on the ground floor. And our intentions are to build a pretty high-end, amenitized doorman rental building, which we think has a serious amount of demand for Park Slope with all the positive stuff that's going on around Park Slope and in Park Slope.
No, you guys are heavily invested in 4th. You guys are heavily invested in 4th Avenue. I live on 5th Avenue. I live around the corner from your project. What's your vision? I mean, what do you see? A lot of people, a lot of different visions. I mean, maybe the boutiques, cool stuff happens on 3rd Avenue. I mean, what's your vision for 4th Avenue? How does that come about?
So this is one of 3 projects we have on 4th Avenue. We're going to be building about 350 units in total.
Ofer sold him 2 of those, so
Yes.
Great job, Ofer.
Hence the reason I'm sitting on the panel as well. What we see is an opportunity to really grow a corridor that has been rezoned and allows us to sort of put the bulk that we think the community needs. We've been very, very conscious of the type of buildings we're building and what they look like to make sure they fit in with the culture of Park Slope and South Slope and Gowanus, depending on what we're going to market it as, and it will be Park Slope. So I think what we see is the continued growth on 4th Avenue. Barclays Center obviously anchors 4th Avenue to a large extent, and as you go away from it, it's continuing to grow day by day, in our opinion. There's a tremendous need for high-end rental in Park Slope. You have a lot of buyers in Park Slope that have nowhere to go because there's not a lot of product on the market. So again, one of the things we've been toying with is, do we convert one of these buildings to condominiums, and does that make financial sense for us, which we'll continue to sort of think through and decide ultimately what we want to do. But I think that ultimately 4th Avenue is going to turn into a pretty special corridor. They're redoing the streetscape, which I think will make a huge difference, because right now it's not that much fun to walk on 4th Avenue, but it is a quick walk to 5th or a quick walk to 3rd, which has now changed the market dramatically, right? What's going on in Gowanus for 4th Avenue is unprecedented and something that we believe will, continue to grow.
That's another a good question I had. I mean, I think you guys are, correct me if I'm wrong, bringing about 250 units to the 4th Avenue market. Were there any concerns that, it might be a lot of, basically you might not be able to fill the rental demand that you're bringing to market? I mean, how was that, what were your internal thoughts on that when deciding to go sort of all in on 4th?
So, two things. First, I think there's a tremendous amount of demand for rentals on 4th Avenue. And second, and to your point, it's not all coming to market at one time for us. So although we have 3 projects, they're going to be staggered over the next 2 to 3 years, even more, 3 to 4 years in terms of delivery. And so to absorb 75 to 100 units, at any one given time for us personally is not a big deal. But there is a lot more activity going on at 4th Avenue besides us. We're one of many who are building, and so there will be a fair amount coming on market. But I believe firmly that the demand and growth of Brooklyn can absorb easily 1,000 units over the next 2 to 4 years.
Yeah, I agree with that. I think 4th Avenue, a lot of people, like I said, I live there. A lot of people, there's already cool bars, places to go on 4th Avenue.
Honestly, I think the retail also, the component of the retail also, I think people are undervaluing the retail potential on 4th Avenue. Because again, if you're by Barclays, it's great, but if you're on 15th Street, it's not as great today. But I do believe that once you have the bulk of amount of units that are going to hit the market, the retail will come and will be very successful.
Who would you like to be in the base? Like what type of folks?
I think it's very Brooklyn, type based. Unfortunately, I think that what's going to happen is Brooklyn, the 4th Avenue corridor is going to turn into a pretty national type of feel because the sizes are there. Sure. We have floor plates that can accommodate 5 to 15,000 square foot. Sure. So it's big enough. What I would like to see, I think, is consistent with what you see on, 5th, 6th, and sort of a little bit more of the mom and pop, not in a good way,
sure.
Brooklyn type retailer.
Yeah, I think, I don't know where Chris Havens is, but please, no Applebee's on 4th Avenue, if we can avoid that. All right, sorry. James, go ahead.
Yes, sir.
Let's talk about your project, and let's jump from Park Slope and Dumbo over to probably something that's more scintillating right now, even in those areas, Bushwick.
So I got to do a disclaimer here because this rendering, this is not going to look like this. Okay, just for the record, this is terrible. And apparently, the way it works is you put a construction fence up. You have to put a picture of what the building looks like. So I just had, I kind of did this. So this is like me doing a rendering. So that actually is the church, and the school is a 19th century Lutheran church and school, and this is a parking lot. So this will be actually brick and tie in and be more attractive than this. But it's 99 units. We actually bought it from the Lutheran church. It had a sanctuary of 900 seats, and as they said, they were praying 9, meaning that there are 9 people coming every Sunday. So they were consolidating, and a lot of churches in Bushwick have been sold off it as well in New York. This one was interesting in that it was actually not landmarked because there's not a lot of landmarking in Bushwick. So we've actually are going to construct 47 of the 99 units in this kind of new building, which again will be more attractive. And then they'll all connect as one building. When we started, we had a school and a church, right, which could have benefited from the J51 program. So we were going to have actually separate buildings. Now it's one building that will benefit from the 421A tax abatement.
Is that as of right? You've bought certificates?
No, it's as of right, and we're doing 80-20, right? But what's interesting about it is, with everybody talking about affordable housing and so forth, we've kind of watched all these tax abatements disappear, right? So J51 disappeared. So in the middle of this, we had to say, okay, we're going to make it one building,
Right.
and then do 51% more new area, and now we'll get that tax abatement. And now that tax abatement's going away in June, and then the ICAP's going to go away in March. And so it's going to be interesting to see how all of us are going to do what we do now, given the relative uncertainty. I'm not going to get into politics because it'll go on for an hour or so, but basically a lot of the units are pretty tight. They're studios, and 1 and 2 and a few 3, same sort of situation. We do this is a starter market. Bushwick has become a lot more expensive, but it's the same crowd that was on Bedford Avenue in '99 and 2000, they've been priced out as Williamsburg has become far less cool with people like me living there. That's basically our crowd from 20 post-collegiate, non-financially employed up to about 34. Our apartments are probably too small for them once they start to get married and have kids, and we just kind of seed that market to the grown-up folks that build for them.
Now, are you guys doing? I mean, Bushwick is kind of known as the new artists enclave, hipsters, whatever you want to call them. I mean, are you doing any unusual amenities or different layouts or loft style stuff? Anything to sort of cater to that crowd that's coming there?
Up there in the steeple, that's a triplex. So there's a bedroom on 3 different levels, and a kitchen, and then the top part of the sanctuary, the apartments are lofts with skylights and bay windows, and the old windows of stained glass are being taken out, and we turn those into shutters. So if you're in your loft, you can open up the old stained glass windows, and then you get regular light coming in, but you still get that feel. So we're not removing any of the floor area that existed, whether in the school or the church. We're just adding new floor area, and a lot of the stuff that we've taken out of the church, we're going to repurpose, whether they be pews and so forth. It's tough with the code to kind of leave anything. You kind of have to take all the good stuff out and put it in containers and then build the building and then take all that stuff and put it back in. You can't leave things the way they used to be because they're, per code, unsafe. But in terms of amenities, I mean, the folks on the top floors will be able to walk out onto a slope terrace that sits on top of the outside of what used to be the old church. That's about what we do.
Very cool. Very cool. And I mean, were there any especially challenging parts of this project as far as, I mean, was it 3 different properties you had to buy in separate transactions?
They owned all that. The city had demolished some old row houses here that were unsafe before we got to them. The church, I'll tell you, as much as we all do due diligence, we bought and
Who does due diligence?
Yeah, exactly, right? Well, you don't want it to go the other way. We bought this thing, and we thought it was 59,000 buildable square feet. And we went and syndicated it and bought it and priced it and did all that. We got about 6 months in, my architect called me and said, listen, it's a little bit embarrassing. You're like, kind of brace yourself, you're like, well, this can be great. He's like, it's actually 75,000 buildable square feet, right? So we said, try not to do that again. Right.
It's better than the other way around.
And
right?
we paid back. This was the good old days. I think it was. But it's hard to get people to invest in Bushwick. It's tough.
Even now?
Yeah, I mean, it's not obvious. I can sit here and tell people that you can get the good rents that we get.
All you gotta do is take them to Roberta's for dinner, and then they're signed up.
Williamsburg, Flushing Avenue, right? It's
right.
tricky, but Roberta's works. I do lots of research in the bars around Bushwick, like as my wife will tell you. It's
gotta
not,
know the clientele.
Come on, do work. You gotta know the neighborhood. But back then, we paid $4 million for that 75,000 buildable square feet. Those are the good days. Yeah.
Wow. All right. David Shorenstein. Let's go ahead. Tell me about, talk to me a little bit. I know a lot about this because we sold this for David when he eventually exited, but tell me a little bit about the building, the project. Start wherever you want, and then I'll kind of guide it from there.
This is 267 Flatbush Avenue. It's a corner building on Flatbush. We bought the property in March 2012 for $2.3 million. And this was before the Barclays Center opened, so we said to ourselves, this area is going to really change. So we targeted specific buildings, and we met with the seller of this building because we saw the building had vacant retail, it had boarded up windows, it was just like a complete mess. It was a great block, but it was the ugliest building on the block. So we ended up meeting with the seller on a Friday afternoon, and by Tuesday morning, we signed the contract, 10% down, non-refundable, and told them we close in 3 weeks, time is of the essence, or we lose our deposit. No representations, no nothing. I think the guy owned the building for like 75 years, so he's kind of emotionally attached as well. After we closed on the building, we were able to secure a retailer that was affiliated with the Brooklyn Nets, got lucky, and I think they were paying about $180 per square foot, which is probably still like a record, especially further down Flatbush. So we got We got fortunate with the retailer. I don't know if they're still in business or not, but it, because they were paying a crazy number for a small space. After that, we renovated a bunch of apartments. We did plumbing, electrical, hallways, and I don't know if you want me to talk about the challenges. that
Yeah,
came
no,
up.
absolutely. I mean, go through it.
The major challenge was that basically as the store was doing their build out, which took them about like 8 or 9 months, we found out that there was like a major structural problem with the building, and that the sidewalk outside the building, if they wanted to do cafe seating, could have collapsed. So it was a big like finger pointing, because they were excavating the basement and trying to build more bar space down there, and we were like, this is all your problem. So it ended up being, we ended up making an agreement with them, so like we had to put in post closing capital to fix the structural problem. So everything worked out well, and then had to renovate everything from top to bottom, and we were planning on refinancing the property, had it all ready to go, and our wonderful moderator over there brought us a crazy offer we couldn't refuse of $6.2 million, literally a year and 2 months after we bought it. So it was pretty much almost 3 times what we paid within a year after adding the value. So
Yeah, I mean,
very
these guys,
successful deal.
as great as we are, I mean, you guys added a lot of value. I think that you guys vacated a large portion of the residential, which was the big value add. I mean, was that a difficult process? Did you guys envision that being something you'd be able to do going into the project?
We really had
I think we
idea.
sold it with 7 of 9 units vacant.
Yes, 7 of 9 vacant and renovated. The people just didn't, once the construction started happening, they just started leaving. So I think we got lucky on that as well. We added it. We put in a ton of money into the building. Every 1 bedroom we converted to 2. Every 2 we converted to 3 where possible. And it was a really funky, triangle building on the corner. So you had to really figure out, and we probably went through 3 iterations with different architects of how to maximize it, because it's really built like a triangle. And when we bought the building, seller wouldn't let us in the building. So it's like we had to kind of just saw the retail, and this is all you're getting, and either you want it.
This and
sign
the joist thing in the basement. That's what Martin was talking about when he said due diligence. That's what he was going
Right.
after there.
Right. It's a retailer's fault.
Retailer's fault, exactly. And when you guys bought it, Barclay wasn't opened yet. You guys were planning on holding it. You were going to refi, and that's a little bit of a funky area. I mean, what were you guys projecting if you were really looking at it that way? And it sounds like you did the deal very quickly. What were you guys projecting in that sort of, that's a little bit of a funky corner? What were you projecting for residential when you went into it, as far as rent per
Residential,
square foot?
I mean, we far exceeded our expectations on what we rented the units for. We were thinking, 2,400. We got upwards of 3,400. So we far exceeded our expectations on the residential, and retail-wise, I mean, we could have never imagined someone paying, $15,000 plus a month for that space. I mean, it was a tricky space, corner space, and that's really what made the deal. It kind of fell on our lap a little bit.
No, there's a front, the barbecue place in the front, and then there was elbow room in the back. Did you guys? This picture doesn't show it, but did you guys make a conscious decision to split up the retail so it was the bigger corner space and a little piece in the back, or was that?
No, they wanted that because I guess they're affiliated with the Brooklyn Nets, so they wanted to create a similar concept. I think that's probably if now it's a barbecue place. It was a Mexican place when we leased it to them,
All right.
a year and a half ago. So I mean that's that business, but that was completely on their own. They added tremendous amount of value. Also, I think your buyer saw that because they dug down into the basement. They created the whole extra space down there. That didn't exist when we had the building because it was like a schlocky attorney's office. So there really was no retail. So, but I think your buyer saw that, that there was extra square footage added, and has a long-term outlook.
Gotcha. Eddie, you own a lot of big buildings. I know you just picked up a couple of properties, 465 Ocean, 543 East 21st Street. It's a lot of units. What was the time frame when did you close on these two buildings?
We closed on both of these in January of this year. One of them we went into contract on and had to basically finish the contract and close within about 60 days from the time we were told about the building until we closed. And the other one was a little longer. It was 3 or 4 month closing.
Talk about Ocean Avenue for a second. How many units is that building?
42.
Okay.
42 units. They're both rent stabilized buildings in that Ditmas Park section of Brooklyn. We're seeing a lot of demand for nicely renovated rental units that are affordably priced for your workforce housing. Something that's important to us when we buy is we like to be, well, close to the park is nice, but we also need to be very close to transportation so that our tenants can go and come very easily, and we provide for them quality housing.
And when you're going into this, I mean, how much upside were these? I mean, on Ocean Avenue, you know, when you went in and you bought it, how much upside was there in the deal? I mean, how are you guys? You know, I know you're doing a lot of due diligence when you go in, but you
Right.
know,
So, I mean, each of the deals is a little different in how much upside they both had, but they both had between 30 and 50% upside in the rents walking in. The real trick of these deals is figuring out how much of that upside can you get to, and how quickly can you get to it. A little different from the other guys on the panel, where we're not new construction. We have to go operate a building that has an existing tenant base already.
Especially when people are trying to preserve your affordable unit.
That's right.
We're going to preserve.
We're more than 80-20 when it comes down to it. But we get a good turnover rate. We're not very aggressive with our turnover, trying to push people out. That's not something that we like to do. But every time we do get a turnover, we renovate the apartments very nicely, and we're seeing very good demand for these units. Probably has something to do with everybody else on the panel, pricing them out of the other areas.
Who are your folks? Like, is it a family? Like, who? Give us.
We get a range of tenants. A lot of them are younger guys sharing a 2 or 3 bedroom apartment. They want to be in Brooklyn, close to the city, close to downtown.
What kind of rents do you get on those 2s and 3s?
It really ranges depending on the neighborhood that we're in, because we have Southern Crown Heights, Flatbush, Ditmas, Kensington. We're pretty spread out throughout the borough, but between 1,900 to 2,200 on the 2-bedroom apartments.
Did you reconfigure the layouts when you get into them? Or do they
Sometimes we don't like to. We won't put up extra walls or anything like that because that gets dangerous. But sometimes we'll flip a kitchen and we'll create another bedroom and stuff like that. Then you have to try to figure out how to make the kitchen and the living room one without making it awkward. So sometimes we'll put an island or a partition or something that makes it feel like a separation.
I mean, I know you guys are heavily concentrated in Ditmas Park, Prospect Park South. I mean, all these sort of above the park neighborhoods that are becoming very, I mean, Prospect Lefferts Gardens, there's projects going on there. Hudson has a project there. I mean, are you seeing sort of a new type of tenant come into these areas? I mean, I know there's buzz out there that they're changing. Are you seeing it as an on-the-ground operator?
We're definitely getting tenants that are more than qualified at this point to rent the units. It's not that we don't have to take tenants that are a close call, if that makes sense. Credit-wise, income-wise, they're qualified renters. And that's something that changed over the last few years.
And I mean, do you think what's your prediction sort of for the future of Ditmas Park and Prospect Lefferts Gardens? I mean,
Well,
you think we're going
We definitely see rent growth. We've seen rent growth over the last couple of years, and we definitely project that there'll be rent growth over the next few years. Brooklyn is only getting stronger and better, especially in these areas when tenants are getting they can't afford Bushwick or Williamsburg or Park Slope, so they come to these next areas, and it's really helped push rents up.
That's actually, I mean, I'm glad you brought that up, because that's another question I wanted to put to the entire panel is, we had basically 3 years of 10% year-over-year rent growth, and I think it's each is feeding each other. There's new people coming, and the buildings are coming, the amenities, but where do you guys think this goes? I mean, Are we going to keep going up with, I don't think anyone thinks we're going to keep going up year over year with double-digit rent
10%.
growth. Right, but I mean, where do you, I think everyone in the audience would like to hear where you guys, you own a lot of buildings, you're building a lot of buildings. Where is this going? Are we still going to go up? You know, is it going to flatten out at some point? I mean, what's your opinion on where that's heading? And whoever, take if you want. I mean, Martin, why don't you start, and then the rest of you guys want to hear what you have to say.
I bifurcate our portfolio into the new construction side of the portfolio versus the value add. We also do similar type of projects as some of the other people here in terms of buying older buildings and reconfiguring them and relaying them out. I think that's an affordable sort of shared business model that rent growth's a little bit different and harder to sort of gauge because it's just young kids sort of putting as many as you can into one room, and if it's a closet, it's a closet. If it's a room, it's a room. So I think that's a different side, but I'm more to our example here, sort of on the brand new construction. I think that rents are going to flatten out a little bit. I don't think we're going to see negative sort of growth, but I don't think we're going to see 10% growth, and I think it's very much driven by the condo market. The condo market in New York City, in Manhattan, has grown tremendously. I think you're starting to see that leak over into Brooklyn. And as that continues to go up, people are going to be forced to continue to rent. And, you know, to buy an apartment in Brooklyn right now, you still have to make a pretty significant amount of money, whereas you can still rent for a relatively reasonable monthly amount. And I think that will allow sort of the rental growth to continue to grow, but not at 10%.
Sam, what do you think?
No, I would definitely agree with Martin. I think the one thing that I would, consider when we're, especially for new development, is the governor is going to be that sort of absolute, per month or per bed basis, and more so the per bed basis for the value add multifamily stuff. And I think that's really going to be where the tipping point, moves someone from either one submarket to another, or moves someone from condo to rental or high-end rental, highly amenitized, to sort of the nicer value add product that some of these guys can develop.
Supply and, let's just talk about supply and demand. We had this 80-20 program. That's gone, right? We need to create more units to meet the demand that's coming. But everybody talk about the tech industry and all the other stuff. New York has got more people than it did, 50 years ago when people were leaving. So that's going to continue. New York has jumped Boston in terms of tech employment. Those people want and do live in Brooklyn. And what we've actually set up now is, it's kind of interesting if you read the report. Instead of going, he's saying, let's do 50-50, right? You pay 25% of your gross income if you don't participate in one of these programs. So let's say I got a building it gets $100, right? I go 50-50, half my income, I lose 60%, right? Which is about 30% of your total income. So if I go 50-50, I actually get less income by doing the 50-50 than if I just paid the tax, which then makes everybody build a bunch of condos and pass the taxes on to the folks that are doing this. So what's going to happen is people are going to build, we didn't build any condos because we had these abatements. You got a bunch of guys like us making money building rental product. That's going to end.
One thing, I do think land prices were the reason that condos have sort of taken off also now. Because you could make rentals work the last 2 years. Now you look at land today and,
well, land's going like this, and you don't have the taxes anymore.
Correct.
So now people are going to build condos, which is going to then force supply in there. But what's that going to do to rents? This guy is the guy that's got a bunch of stuff. He's got low basis. He's loving it. It's going to be great. I'm telling you, his stuff is going to be the best. I'll invest with you.
That's why they call him. That's why they call him Big Ed. He knows what he's doing.
What do you think?
We're seeing a definite drop off from a year ago. Well, good thing we're coming into the summer months, which are red hot for rentals. So it's tough to gauge. We kind of split it up between winter and summer. And last winter for rentals was terrible. It took 3 months to rent something that took a month over the summertime, and you have to give them a month free. You have to give them 2 months free, and because there was a lot of supply out there for whatever reason. And now with we go to areas where there is a lot of new construction, so people are trying to really get into those buildings, and they're offering the incentives, and we're about 20% less, but they want the amenities. So as long as, I guess, that these parents who are the guarantors keep paying the kids rent, we're going to continue to see, as long as these guarantors are making, I see some of these statements from middle of nowhere, 500,000, $1 million. I'm like, wow, that's an unbelievable job you have. I don't know anyone who has a job like that in Manhattan even, and they can't afford Manhattan. So as long as we see these guarantors pushing these kids in, because, you know, we rent to a lot of people that are, I guess, not as financially qualified, they're younger kids, or they're just starting out, they don't have the income requirements to rent a $3,200 two-bed, two-bath, and a Greenpoint walk-up.
I think he makes a good point about the cycles of leasing, because I think everyone sitting on this panel, you know, February 2nd probably looked into the mirror and was like, oh, here we go again. But then I guarantee you bring the same panel up here July 15th, and we're all going to be high-fiving each other. So I think the cycles of leasing and when you lease, particularly for the product type that I think a lot of us are dealing with, you know, it's if you're leasing in the summertime, you feel pretty good about yourself. If you're leasing in the wintertime, you do not.
I mean, Eddie, in your rent-stabilized buildings, you know, I mean, do you see this? I mean, I hear about this cycle, and I'm like, there's so much demand for product in Brooklyn. You know, I mean, do you see these cycles as heavily as maybe some of the new construction guys are seeing them, or is it
Not
different?
really.
Or do you just own so many buildings you don't notice the difference?
Yeah, I lost track. No, we're pretty spread out evenly throughout the year. We have better demand in the summer. I'm not going to say we don't, but we don't see things sitting on the market for extended periods of time. So instead of staying empty for 2 weeks, it's 3 weeks in the winter. You know, like it's not that long. It's not. It's a different kind of business.
Well, as the percentage of vacant units against your inventory versus launching a building.
Right, that's also a different story. We're getting, you know, out of a 50 or 60 unit building, we have 2 empty apartments or 1 empty apartment at a time. But out of the whole portfolio, we'll have 10 or 20 units on the market at any given time. But there's this constant turnover of
Do you
units.
stagger your leases?
No, it's when you know, we don't really have that option.
Right, 'cause you're mostly
Because
stabilized.
they're stabilized, so we're bound by the rules that we have to go. So it's 1 or 2 year, you know, either way.
I mean, Sam, Jamie, and Martin. But let's start with Sam. I mean, are you guys? I don't know if you have any real control over this, but at the end point, are you aiming to get these projects ready to go to market in summer? Is that a big factor in the timing?
That's the hope. Yeah, definitely.
We've had conversations internally about potentially even holding the projects back a little bit, because the delta in rents could be so significant that it may often, we haven't done it yet, but we have this philosophical conversation that never goes anywhere. But at the end of the day, like, if you can rent apartments for 10, 15% more, logically, if you do the math, it would make sense to hold the project back a little bit from completion to deliver at the right time.
We've done, like, we just kind of launch and don't push the absorption.
Right.
You just say, this is the rent in July. I'm in January. It sucks.
Right,
Right? But I'm
it's
just gonna
tough to sit
hold
through
rent, and you just, your velocity
But
slows
it's tough
down.
to sit through that. And then you got to factor in the fact that you're a fully built building and you're carrying a fully loaded like loan, as opposed to maybe in earlier construction you may be carrying 25% of that.
Without a doubt, but you're going to refi off that
Yeah,
rent,
yeah,
right?
yeah,
So
100%.
we were about to launch. We're doing this building in Williamsburg. Used to be called the Steelworks Lofts. We call it Lebowski now because we really like that movie. And no, I'm not kidding. Really.
We are in the
it-
BAM theater,
yeah,
so we should
true.
sneak a movie
Yeah.
reference in here somewhere.
So we're about to launch that in probably in July, and that was a big part of the timing. It's taking us a little longer, and we like to say that we wanted to launch in the summer, and that's
Right.
why we held it back. But it was actually because it was an incredibly difficult
I
construction
understand.
project.
I understand. I like Big Egg's business model.
Yeah, that's it.
Nothing moves the needle. Nothing moves the needle. Sleeps well every night.
I think Martin and James, you started to get into this a little bit, but I guess the question is, you know, there's so much and rental product coming on the market. It's justified demand, but when do you guys, if at all, see this kind of turning back towards, all right, now it makes sense again to do condos?
Now.
Really?
I
Why?
mean, listen, it depends on where you think you are in the cycle, but, you know, I think that there's still a huge gap between Manhattan and Brooklyn. I think the tax picture that we discussed here is dire in that regard. So, and there are a lot of folks that are going into your building, for example, that would like to buy, and there's no inventory. I'm not a condo builder, but I might be.
So I agree. I think now's a great time. I think the problem that you have when you bring in investors and institutional investors and all that sort of stuff is it's very hard to comp the market to where you think it's really going to be in a year or two. You know, I think everyone sitting here, or at least let me phrase that, me sitting here, I think the condo market in the better spots of Brooklyn is going to be around $1,500 a foot. That's my guess. But I cannot comp that out and prove that to anyone. What I can prove is if you want to touch anything in Manhattan, you can't touch it unless you're at $2,500 as a base sellout.
That's it.
So that has to push into Brooklyn. It has to. And we're seeing it. I could point to one or two properties that have sold out recently that have hit those kind of numbers. But, you know, when you bring in investors, which we do, you need to be able to point to real data points. And I understand why. And what I'm concerned about is I think you may miss the market if you don't get into it now.
Yeah, I mean, I think in Park Slope and Carroll, Cobble, Borum, we're already seeing projects that have sold out for $1,400, $1,500. I mean, guys brought a project on the market expecting $1,100 and they went to $1,200 or $1,300. You know, so we're there. And
Let me ask Sam, like, when you went to your folks, you know, you had to convince them to do this project. Could you think you could get them there at 1,500? Because you take like Toll Brothers, they're getting 1,500, they're sucking down the full tax. But then you got to go tell somebody in California, right?
I think they'll believe you in California. I don't know about
Maybe in California, maybe not. Oh no, Texans are like,
London,
come on, let's do it.
London's a little easier, yeah. No, it was definitely an uphill battle, right? Because the comps were not supporting what we felt we were going to achieve. Having said that, a year and a half ago, land prices were in a very different place, right? So we had that help on the other side.
Fair enough.
So in neighborhoods like Bushwick, I mean, are you doing any condo projects right now, James? And if
We
you were,
did 2 condo projects in Bushwick, and one of them was mildly successful, and the other one was not successful.
All right,
You know,
so-
just even, because it's too early a market for that, right? I still think that
Do the
Williamsburg.
buyers not have the money?
They just, you know what it is that they don't have the money, they have to get the loans, it's kind of gritty, it's not a condo market. And the other thing is, you're talking about, like, great, I can get the dirt for $150 and I'm gonna build it for $400 and then I'm gonna sell it for $600. It's not quite enough, really. You know, like at a multiple level it is, but at some point it's like,
But I would assume the rental model probably lands up yielding you equal or better returns without the risks and without the tax implications.
Yeah, that's why 90% of what we do is that.
Right.
You know, I think Bushwick, no. I think all of the kind of what I call grown-up Brooklyn, which is, you know, down here and Borum Hill and Cobble Hill, et cetera. I think it's anything that's for sale driven, family driven, that's built down here at any sort of reasonable land basis will be wildly successful.
okay, we'll go to questions in 2 minutes, but you know, we have new construction, existing. I mean, you know, Martin, you own both existing multifamily and new construction. I mean, is there one you prefer? Are there different challenges to each one that kind of you know, drives your process a little bit?
I mean, the answer is I prefer whatever deal I can find. So wherever I can make money is what I prefer.
Come on, David sold you 12th Street.
Yeah, he
you
did.
found
He
a
did.
good one.
I bought a building from him, and he was very nice about it. So I think that I like both, and I'll tell you why I like both. I like the security of what Big Ed does. It's great. He sleeps at night. And I like the risk and the reward of what we're doing in Dumbo. We're both working on some interesting Dumbo stuff. And I like the idea of building rentals where sort of you're downside protected in case things really move on you. So the combination of all of them is really what you focused on. And, you know, in terms of what I like better, I like them all. I think they're all really interesting and different. I find dealing with existing buildings harder. There's a lot more stuff that comes up that you just don't expect, and you're dealing with occupied people, and some of them like you, and some of them definitely don't. And, you know, so I think that's a little bit more difficult, but, you know, I don't have a preference.
Before we'll go to questions from the crowd in a second. Is there any questions you guys want and to ask? Anything you're wondering about that you want to put out there? Anyone? No. All right, so we'll go to the. That's why I heard you want to answer the question. So we'll take questions from the crowd for a couple minutes. Mr. Mondrell.
One thing I always like to ask clients is, other than the neighborhoods that you're working in today, that are spots, what's your favorite neighborhood in Brooklyn?
He asked, "What's your favorite neighborhood in Brooklyn right now?" Sam, what about you? You start.
Not Prospect Leffert Gardens. We like, you know, Williamsburg is really prime. We like South Williamsburg and East Williamsburg. We've looked a little bit in Bushwick. It's gritty. It's tough. We like areas on the east side of the park, the northeast side of the park. We like Sunset Park on the southwest side. We haven't gone so far in Flatbush, Ditmas, but we like a lot of the areas as Ed described that have the access to the park and the good infrastructure and amenities that get you into the city reasonably quickly if you happen to work in the city.
What about you, David? I know you guys just bought a big building on Albany Avenue over there, sort of in the Crown
We
Heights
just
region.
we bought a large building in Crown Heights recently. We kind of follow anywhere the subway goes, so we want to make sure if people are going to pay these type of numbers that they have a way to pay their rent, I guess you could say. We also are now really focusing on areas around the park, like the south side of the park. We're closing on a building next week on East 19th Street, south of the park. I was driving around there yesterday, and I just think that area is about to really blow up. And then we bought a building in Sunset Park, and I really think that whole area is going to be rezoned one day. It's just ripe for rezoning, and the Nets moving their practice arena there and all that tech movement. I really see Sunset Park, and we're fortunate that we bought a building there like 6 months ago, a 20-unit building, and we're doing really well with it. So, it's just moving further out, as everyone on the panel said. So, it's just where you can find it.
What about you, Martin?
I love South Williamsburg. I think it's just very expensive, but I love what's going on there, and I think it's really close to sort of catching up to North Side. We bought a development site recently in East Williamsburg that I think is an interesting area that I think has a lot of room to grow, and I think we're there early, which I think is exciting. And unlike you, I love Prospect Heights. It's the one deal that got away from me the last 2 months that was painful. I think there's something interesting going on over there.
Gowanus.
Gowanus?
Yeah.
Why?
It's different in the way, like, Williamsburg is kind of sometimes insufferably cool, right? There's a little more laid back or aggressively cool. I think that there's a part of Gowanus that is, it's still hipsterish, but also laid back. They just have different tastes. You could just compare the different bars and restaurants and venues and the nightclub here versus the nightclub here. This would be R&B and this is techno, so like this is, it's just different. And so I think there's a lot of growth in that kind of Whole Foods, 3rd Avenue corridor.
And Eddie, I know you're heavily in Ditmas, Prospect Park South, Flatbush. I mean, where are you going next? Where do you guys want to go next?
I mean, we've been trying to buy in all those areas that we've always bought in Ditmas Park and Prospect Lefferts, and those are the areas we like to focus on.
Are you looking at stuff in Sunset Park?
Not too much, because they don't have we don't find the buildings the size that we need in Sunset Park or Gowanus. We don't find those 40, 50, 60 unit buildings existing over there. They're mostly smaller units, 8, 10, 12, 15 unit buildings over there. So we stick to Ditmas and Prospect and Lefferts, and we like those areas because they continue to grow every year. The tenant base gets a little better every year, and they have this neighborhood feel to them, and people like to live there.
What about, there were a couple recent big trades in Brighton Beach and Coney Island. You guys, there's big product out there. Do you guys look out there?
We've looked at it. It's not an area that we're really focusing on.
All right.
We like to stay closer to the park.
Me too. Questions? More questions? In the back there?
I own some multifamily buildings in North Brooklyn, and I'm very concerned lately, and very concerned about the L train rush hour, and in general, inter-Brooklyn public transportation. Are you guys concerned about that as well, or is there something you think we should all be doing to encourage more investment in that?
Write your congressman?
No, I mean, there's a new bus line that runs along Kent Avenue, which is helpful from North Brooklyn to South Brooklyn a little bit. The ferry, but the L is just gonna. And what's funny is the L was like the top-ranked train, even with all that, and it's just a victim of its own success.
I actually took the G train here today and
Yeah?
couldn't believe how many people were on it. At like 9:30 in the morning, it was packed. I couldn't believe.
Did you run like right at the end to get to the
I did,
train?
actually.
Yeah,
Did you feel like you
you
stepped?
always feel like you're there, but you're not. You got to keep going.
I think it's a good point. I don't think there's a good solution to it yet.
Did you feel like you stood out on the G train at all,
A
Martin?
little bit.
Okay. That's fine. Yeah. So I'm sorry. These guys will be up here for a couple minutes after we have to end now. We're running a little bit behind. But thank you very much, guys. You were awesome. It was a great discussion.